Hello traders, so let's start our first topic, that is price action. Now one question which might come is like, Rohit, why are you wasting the time? We know the price action, we know the basics, candles, support, resistance, everything. Just tell us the strategy and we are good to go. See, the first thing which you have to understand here is this is not a YouTube video, right? Which you randomly came across and you might try it for 1 or 2 days, and if it is not working, you will simply skip the strategy and you'll move to the next strategy or maybe to the next mentor, right? See, you came here, you purchased this course. The only reason was because you saw some sort of results and you want those results to reflect in your account as well. For that, definitely you want the strategy. But if you understand how the strategy was built up, what is the basic, or you can say what is the core of that strategy, how the strategy is built up, why it should work, if you understand that, it will become very easy for you to easily trade on that strategy, no matter even what kind of market is in front of you, because you know the basics about that strategy. And that is going to build up something which you call as psychology or a mindset of the trader. So we are not going to discuss entire price action surely, because we got limited time, right? So I'll be teaching you the concept which is actually required there for that particular strategy. But definitely if you want to learn the entire price action basics, I already have covered that in my previous course. So I'm not cross promoting any product, but if you simply just move to the my academy website, that is the Unemployed CEO Academy. So if you see, this is the what we say, the website, and here if you scroll down, you will see what all this course contains. It contains 10 modules covering entirely everything from the basics. So how the stock market works, how the derivative market works, how the options are working, what are the Greeks, how they control the option movement, then the technical analysis, the fundamental analysis, then you can say strategy, stock selection, and even the live trading on those particular concepts which I taught you. So you can just check the entire curriculum here. So this is where you, if you want to learn the entire thing, you can definitely check it out. But now what I'm going to teach you is the only support and resistance part. Why? Because that is the only one concept which is required here for the trading part. So what is the support resistance? So let's go to the pen and I'll explain. What is support resistance? See, support resistance is in a layman language, I can simply tell you something beyond which the market cannot cross. Okay. Or you can take a room. Suppose this is the room, right? Now, if I got a ball in my hand and if I throw it down, definitely it will hit the floor and it will bounce up, right? So if I draw it here, let's assume this is a ball, and if I throw it down, so it will touch the floor, right? And after touching the floor, it will bounce up. Is there any chance that the ball will cross the floor on the lower side? Even if let's say I'm on the first floor, will it go to the basement or the ground floor? No, that's not possible, right? So the ball is going to bounce at this particular point, and this part we call it as support, right? So the ball took support of the floor. So this is where you can simply say in stock market part, if the stock price was falling down, at some point it started bouncing up. That means demand for that particular stock increased at that point. Even we can call it as demand zone, right? We can call it as demand zone. Why? Because at this particular point, the demand for that particular stock, the purchasing, the buying pressure increased. The buyers were more dominant and therefore the market moved up. Now let's say the same ball, if I took and if I throw it up, will it cross my ceiling? Right? Definitely a logical answer will be it won't, right? So at some point the ball will go up and hit this ceiling, right? The ceiling, and it will come down, right? So that particular part is called as resistance, because market is not able to cross that part. Okay, sorry for my bad handwriting, but try to understand the concept, and definitely try to keep noting all these points side by side, because that notebook, or you can say the notes, will be a good reference point for yours ahead in the future. Okay, so this is the resistance zone, or in other terms what you can say, at this particular price the stock price started falling down. Why? Because demand was very lower than the supply. A lot of people were eager to sell their quantities, but no one was ready to buy it. Therefore the price fall down. The demand for that particular stock keep on decreasing. Okay, so this is how we establish the support and resistance in the market, and that is exactly what we're gonna observe in the charts as well. Okay, so now if you come to any broker's terminal, not anything like, I'm not promoting zeros or something. So here any broker platform you take, the charts will be the same. I personally feel that it's very easy to trade on Zerodha, so I use Zerodha. But there is nothing, you can use Angel, Upstock, any good, you can say, or you can say the best brokers in India are good to go. Now, if I open the chart, the first thing is a time frame. So you will definitely find something called as 1 minute or something written on your charts. So there are different time frames in which you can observe the chart. What is chart? Chart is basically the fluctuation of price with respect to time. So it's an X and Y axis. On one scale, you see the price, like on the, you can see on the right hand side, right? This is basically your price scale, the stock price. And on the lower side, you can see the time scale. So 3rd November, the price was moving forward and how the market reacted, whether it went up or down. Like if you take an example of today, Bank Nifty open here somewhere like 40,900, sorry. Yeah, somewhere like near 40,900, and then it started moving up, right? So there are two different types of chart pattern. There are multiple, but the most common use are line. So definitely you might have seen it many times, right? Across any, even if you search on Google, it will be showing you the line charts. But line chart is quite difficult. Why? Because if you're trying to do intraday trade, you won't understand what buyers are doing, what sellers are doing, what kind of sentiment the market is carrying. Either the buyers are strong and are they in sufficient profit or not? Can seller attack in the market? Can they bring the market down? A lot of these things cannot be understood using line chart. But just if you change something, so there is something called candlesticks or Japanese candlestick chart. So if you change it, now you can understand a lot of things, because green candle is indicating you the buying pressure, whereas red candle is indicating you the selling pressure. But just 1 or 2 candle is not sufficient. You have to see a complete action, right? So this will help you to build up an idea, or at least you can be able to project something by doing some sort of analysis. So definitely, if you try to summarize what is price action, it is just simply understanding the price and then reacting to it. Okay, so let us establish the support resistance. Now how to draw that in market, right? Because it's very easy. This was the my floor, this was my selling, and it was very easy to draw. But how to draw that in market? See, one thing which is very easy that you have to understand is U-turn. See, this is a U-turn. Market went here, here it took a U-turn. So those who got specs, just remove your specs and you will see everything blur, and it will be very easy for you to understand where these zigzag lines are going, right? So it will be very easy for you to understand the U-turns. And those who got a normal eyesight, simply try to understand, just take a bigger U-turns, don't go for the smaller U-turns. These smaller U-turns are not part of support resistance. For example, go to the any time frame. See, time frame doesn't matter, because on every time frame some sort of price action is happening. So we'll go from higher to lower, always remember that. So let's go to higher time frame. Now what I see, I have to just see the U-turns. So I can see a U-turn here, a U-turn here. So this was the support, again market fall till this price, again market took support and market bounce up. Here market went, took a U-turn. Here market come and again it is trying to take a U-turn. So we'll see if it break or not, that is a future thing. But currently what we're seeing, market is trying to follow the same thing. We'll just make it more smaller, we'll see more chart. Now if you see here, market fall, took a U-turn. Again market fall, took a U-turn. Again market fall, took a U-turn. So this zone was the support zone. Whereas when market was going up, this point market fall, again went, market fall, again here market went, and market came a little bit down. So what is this? This is acting as a resistance zone. So somewhere beyond which price cannot go is a resistance zone, and some price beyond which market cannot fall is the support zone. And you'll find it working in all charts, not necessarily only Bank Nifty. It will be there in Nifty, in Bank Nifty, or you can simply say in index, also in stocks, because this is the basics on which the price is working in market. Okay, so open anything. See, now I'll move to the Nifty. Time frame doesn't matter. Any time frame you open, you will see the things happening, right? So now if you see here as well, I can see this is the resistance zone. Market cannot cross here. This is the support zone. So every time the market was coming near the support, it was bouncing up, and every time it was coming near resistance, it was falling down, right? So this is the first thing what we have to learn, the support and resistance. And how to practice it? Very easy. First, go on the 1 day time frame, like what I did now. Practice it on 1 day time frame. Doesn't matter it is a stock or index or something, it will never matter. Just go to 1 day time frame and start doing it. Always the higher time frame first. Now you'll ask why. The basic or the logical answer is, on the higher time frame there will be less number of candles, right? So there will be less noise in that particular chart, and it will become very easy for you to understand that support resistance. Then once you understand on one day it is very comfortable, move to 15 minutes, then move to 5 minutes. Slowly we'll be increasing the difficulty. Like normally how do we play games? From difficulty level 1 we move to difficulty level 10. Likewise, go to one day. If you're more comfortable, go to 1 hour, then you can go to 30 minutes or 15 minutes, and then you can go to finally 5 minutes. And the last for the scalping will be requiring 1 minute. Okay, I'll tell how to do in one minute time frame, but currently this is what you have to practice. At least 5 examples you should be doing. For 5 examples, it will hardly take 1 hour to do each and everything in a very slow manner. If you do fast, it will hardly take 10 to 15 minutes. But still, I'm just telling you, I'm assuming that everyone is beginner, and it will hardly take 1 hour. So if you feel no, that is also I'm not going to do, I'll do it in the future when I'll be actually trading. So definitely you're making one bigger mistake, because you're trying to assume few things. And see, I'm some random guy on the internet, right? I told you something, I show you something. Now you cannot directly go tomorrow and start trading on my strategy. You have to actually see it working, then only you should be trading it, right? So that is the right approach. Now moving forward, once we understand what is support resistance, we also saw when the support resistance get break, market shows a really good move, right? Like here, we are observing, just a second. Yeah, right here. See this, in this zone, the market was in a support resistance. This was our resistance zone, this was our support zone. The resistance broke and market moved really good on the higher side. Also, when the support will break, market will move with a higher speed. Like for example, let's assume this was a support zone. Market came, bounce up, market came, bounce up, market came, bounce up, bounce up. Finally broke, and if you see this point, there was a fast fall, right? So one more observation what we can see is, whenever the support resistance get break, we see a fast move. Like for example, this was somewhere like 1000 points, yeah, approximately. It was 1000 point fall in the Nifty. That is somewhere like 6 to 7% for the Nifty price. So definitely it's a big move. Here also, after breaking the resistance, the market moved quite big, and 15% move. See, we are not looking for all these big moves. Okay, what I'm trying to tell here is, once we see a breakout or breakdown in the support or resistance, we see a big move, a fast move. And this is what is required for option buyers. We all are option buyers. Okay, normally we do follow a big traders, like for those who are making maybe few lakhs in a per day. But what we have to understand is, they are someone with a higher capital. Always look what capital is been invested to get that part of return. So let's assume someone has 1 CR, 10 CR, 12 CR or something, and then they're trying to trade and then making few lakhs. Okay, definitely if you got 1 CR and if you make 1 lakh per day, capital wise it's quite good. 1 lakh per day is a very big amount, but percentage wise it's just hardly 1% return, right? So you have to see ROI, not what is the actual gain for that particular day, not the MTM profits. Okay, normally when we'll be doing option buying, we'll be getting very high returns, because option buying it's quite risky, whereas option selling is a little bit easy. That doesn't mean option selling is easy. Okay, it is also hard, but when you compare that to option buying, it becomes quite easy. Okay, but normally I'm assuming 95% of people, including me, we do not have 1 CR in our account, and we don't want to do option selling. We want to do option buying. For that case, what we'll be using? We'll be using a method in which we should get a fast move. Only in that case, the option will move fast and we'll be able to make the profits. And what we understood here, only when the support resistance break, market shows a big move. We'll see a few more examples. Okay, now I can see some here. So let's say this is the zone, right? Market came, fall, market came, fall. After that, market broke, took a support and then move forward. So one more learning point which can be added is, once, see, this was the resistance zone, but once the resistance zone was broken at this point, now it became the support zone, right? So definitely, first thing what we learned was support resistance. Second thing what we have to learn is, once the support resistance break, we see a big move, right? This is support resistance. If it breaks, market shows big move. But if the resistance is broken, right, then it should become a support. So resistance will become support, and now market should move up. Or in the other case, if the market is breaking on the lower side, that means it will break the support. If the support is broken, now it should act as resistance and it should find support somewhere below. This is how the market works, because market will always be in some sort of support or resistance. Understood till this point? Okay. It's easy, and if you got any sort of queries, do feel free to contact me. I'll be sharing my Telegram or at least a WhatsApp number, or even you can email me. Whatever doubts, queries you got, take a screenshot of that chart, send it to me. Each and every query of yours will be solved. So feel free, no matter how basic question it could be. Don't think that it could be silly or I might be irritating asking repeated questions. Do not feel anything, because it's very important to understand the concept first, right? So we understood three things. The first thing, again I'm repeating, first thing we understood is the support resistance. It is basically a point from which the market takes a U-turn. So once market take U-turn, then we establish this is a resistance zone. Market was falling down, it started moving up, now we establish it's a support zone. Some point related to it, time frame doesn't matter, no matter what time frame you will be using. Support resistance happen or takes place on each and every time frame, but for practice you'll be starting from 1 day time frame, then to 1 hour, 30 minutes, then 15 minutes, 5 minutes, and then continue to the 1 minute time frame, and at least you have to practice 5 examples. It will not going to take a lot of time. You spend a lot of time scrolling on Insta or Facebook. Take small time for your future, spend at least 1 to 2 hours looking at that, and that is more than sufficient. So that was the first point. What's the second point? What we see is the momentum, that is a fast speed. Okay, so what we saw, fast move in market after the support or resistance is being broken, right? And third point, once the support or resistance is broken, let's say support is broken, then it should act as resistance. If resistance is broken, it should act as support. For example, let's say market went up, fall down, again went up, fall down. So I established this is a resistance zone. Now when the market breaks, now this should act as a support, and again market should bounce up, right? These are the only three things what we have to learn from the price action. And apart from that, as I told you, go from higher time frame to lower time frame. That's it. That's the only thing what we have to learn here. Definitely a lot of people might be knowing it. Okay, but now we're going to add something which is very important, and that is the crucial point. Okay, now this is the what actually I want to teach, but all this before was the basic part. See, as an option buyer, we need a fast move in order to make profit, right? So let's say we want to take a trade. We know this is the resistance, this is the support, and market is trading here. And we also know that once this support or resistance will break, we're gonna see a big move. For example, now market is trading here. Now it is near the resistance point, and there are high chances that market might break that resistance. And if the resistance break, you're gonna get a big move, the fast move, and that is what we are requiring, right? So here, if we want to see that market is gonna break on the higher side, how do we determine it, right? Because it can break here, it can break here, it can break here. And that is the $1 million question. If you know at what price, at what point it's going to break, you'll be simply trading on that single point, right? So how do we determine that, or how, at least how could we conclude this is the point from which it could break, right? So simply try to understand. Let's take an example of resistance. How do we establish market is created resistance? Let's say the market was moving up and some point it started falling down. So now we understood this is the area where we understand there is a resistance. See, resistance, I'm trying to draw a single line, but it's never a line, because sometimes market will come, touch exactly, sometimes it will cross a bit and then come down. So it's always a zone, okay? But what will happen? This is where the market came down. You understood it's a resistance zone. Market came down, again market came up, touch that area, and again fall down. So what you're seeing here, we're trying to understand in a demand supply zone, okay? So demand is somewhere where buyers are getting active, and supply is somewhere sellers are getting active. Near resistance, it's a supply zone, right? This is what we learned previously. And near the support, it's a demand zone. So here we are seeing sellers are getting active. So first time when the market fall, we understood this is the point number 1, okay? Or you can say touch number 1, where the sellers got activated, okay? Secondly, when the again market come to same point, again the sellers got activated. Now the market came down, again market came into same price, and market started falling down. So we call it as the third touch, or the point where sellers are getting active. What to understand? See, simple things. When market is going up, someone is buying. When market is falling down, someone is selling, or the buyers are trying to book the profits, okay? Or someone seller means someone who is doing short selling, okay? Now if you don't understand short selling, again definitely you can go to that basic course, everything is covered there. But short selling is basically exactly opposite of doing normal buying, and we'll be doing buying, so we are not going to cover the short selling part because that is not something which is useful here. So keeping it short, here if you want to make money, you have to short sell, just it. If the market falls, and you'll be making the profit. So here the sellers got active, they pushed the market down. Again the market came to the same point, again the sellers pushed the market down. But what we see, again and again market is coming to the same point, that is the resistance point. That means somewhere the buyers are trying to push the market no matter how much the market falls. Market falls, buyers coming in, market falls, buyer coming in. So that means there is some sort of strength in the buyers, but still they are not dominant. Why? Because sellers are coming and hampering the stock again and again. So when they will be dominant, once this resistance will break. And always remember, there is high probability that the market is gonna break that support or resistance. In this case is the resistance, this resistance from the touch number 3. Here we are not expecting it to break, here also we are not expecting it to break, but from point number 3 or touch number 3 we are expecting it to break, and we'll be planning only for the breakout of the resistance zone. Okay, for example, market doesn't break this, again comes down and again try to touch, so this will be touch number 4, right? Let it be. Here also we'll be planning for breakout only, we are not planning it will fall down, we are planning it is going to break on the higher side only. You have to be very clear about your analysis, also your view towards the market. Every green and red candle, if you keep switching between buying and selling, definitely you'll be doing a lot of over trading and aggressive trading, or you can even say revenge trading. All these 3 bigger mistakes can be cancelled out if you keep your view fixed. If it is resistance, it is touching more than 2 or 3 times, definitely it is gonna break. That's it, nothing else. Exactly same will be for the support. I'll draw it. Let's say market was falling down, at some point market bounced up, so we established this is a support zone. Sorry for the bad drawing. Okay, so this is the support zone. Support zone means a demand where buyers are coming and buying the stocks or index, whatever it is, doesn't matter. You can simply say market price. Now market again fall down, here it will again bounce up. Now one basic or logic behind is, some people might ask why it is bouncing. The reason is, see, someone sorted here, okay, for the short sell. This for the market fall till here, and some buyers come and took the price up. But after it went up, they saw it, so they missed the opportunity. So now they're waiting, if by chance the market comes at the same point, I can again come and buy, because last time people bought it here because they find some value in that stock or that price, so they came and bought. So again they're expecting market to go up. So this will be our point touch number 1, this will be our touch number 2. What we know, if the market comes at the same point for the 3rd time, from here onwards we expect support to break, right? On the other side it was resistance, now this is the support, so we're expecting from the touch number 3 it might break. So let's say it might not break at the 3rd point, right? The market goes up again, so no problem, it's a 3rd touch, again market might come down after some time, maybe 4th touch, maybe 5th touch. Normally 3rd or the 4th time is a point where the market breaks. Okay, if the market is, sometime market is not in that trending mood, that time it might make multiple touches. But on most of the cases, you can say 70 times to 80% time, market will break on 3rd or 4th touch. So that is where we'll be getting interested to take the trade. So this is all what we have to learn about the price action. I hope you understood the concept. It was quite easy. If you're not understanding it, if there are any doubts, make sure to reach me through WhatsApp or Telegram. I'll be adding the contact number below. Feel free to text, and do also share the screenshot so I could also understand what kind of query you're getting on that particular chart. What we learned so far is, first, there is a support resistance market from which the market takes a U-turn, so there is a change in direction. Second thing, once the support resistance break, the market makes a big move. Third thing, once the support is broken, it becomes resistance. If the resistance is broken, it becomes support. And fourth and the last, which is the most important point, is at what point it could break. So if the market touches a same support or resistance from more than like 3 times or more than that, it is ready to get broken. So we'll be planning our trade accordingly. This is what we have learned so far. So we'll conclude this chapter here. See you in the next chapter.